Good morning. Welcome to the latest Portfolio Institutional Diversity webinar. My name is Andrew Holt, and I'm Senior Writer at Portfolio Institutional. Today, we're going to explore diversity and investment. It'll be made up of two parts. The first on diversity and the mechanics of investing. The second on investment industry approaches in dealing with the diversity. We have a top quality panel to discuss these issues. Let's meet the panel. First, Candice.
Hi, everyone. Thank you very much, Andrew, for inviting me. I'm really glad to be part of this panel. So I work as ESG product specialist at Carmignac, a French asset manager. And I've been working in ESG for the last 12 years now in the asset management industry between Paris and London. So currently, my title does not directly reflect my interest in diversity, but over the years, I have been involved in many conversations related to diversity of boards, relating to voting and engagement, diversity of investment teams as well, diversity of cultures. And my involvement in this field is now only growing as we are launching a social fund that addresses this subject among other key dimensions of the S factor. And what I would also mention is that at Carmignac, our managing director of the UK office, Maxime Carmignac, is also a great support to encourage diverse teams and retain women in the financial industry. So I have benefited a lot from this support and other inspiring women along my 12-year career now. And so when in position to accelerate my career, I've benefited from that. And for example, by being encouraged to do an MBA while having my first child and change firm when having my second child. So I have been thinking a lot about this topic, and I'm really glad to be able to share some thoughts with the panel today.
Thank you very much, Candice. That's excellent. Claire, can we go to you?
Thanks, Andrew. Yeah, thanks for inviting me to be part of the panel today. I'm Senior Global ESG Manager at Legal & General Investment Management. I've been at Legal & General for about 12 years now. I focus on a lot of different S topics, but for the last 10, 11 years, been really leading our engagement campaigns around diversity. I've been in the industry for about 20 years now. And very passionate about really trying to push forward the availability of data, but also really trying to improve companies what they're doing on diversity. I do a lot also internally with LGIM, and I also sat as chair of the 30% Club investor group in the UK for 3 years. So we've been very involved in that initiative as well.
Thank you very much, Claire. On to you, Lydia. Hello, Lydia. Can you hear us?
Good morning, everyone. I'm Lydia Guet from Cambridge Associates. We work with...
Oh, dear.
Yes. Oh, you can't hear me?
Sorry, you froze.
Trying again?
Yeah.
You can't hear me?
That's right. You seem to freeze for a moment. If you could start again, that would be great.
Can you hear me now?
Certainly can. Thank you.
Okay. Lydia Guet, my name from Cambridge Associates. We work with institutional assets owners, endowments, foundation, pension funds to build portfolio that are aligned to sustainable megatrends, including climate change, but also topics such as in gender lens investing, diversity and inclusion. I'm part of the sustainable and impact investing team here at Cambridge Associates, working with clients directly, but also looking at new investment opportunities, researching new funds that have a specific sustainable impact focus.
Thank you very much. That's great. Is it possible, Lydia, that you could turn your camera off and then just speak to the webinar, and that might save a bit. That might make the reception better. Is that okay? And last but not least, to you, Sachin.
Hiya, thanks Andrew, and thanks for having me on the session today. So my name is Sachin Bhatia. I work at Invesco. I head up UK consultant relations and core institutional. So actually on the face of it, not a direct ESG or D&I role, but the other hat I wear is I sit within the diversity project, which is the industry-wide body trying to promote better diversity and inclusion, and I co-chair the race and ethnicity work stream, and also I'm one of the founding members of the Ethnicity Network at Invesco, so heavily involved in trying to understand where we can improve as an industry and work collectively and collaboratively in terms of improving D&I, particularly with the race and ethnicity lens.
That is fantastic. Well, thank you very much, and thank you very much all for participating today. Hopefully we can start off with Lydia. We were going to start off with you, Lydia, to share some insight into different types of diverse approaches in investing. Could you give us an insight into that?
The way we look at it has two big dimensions. One is looking at all asset managers and really understanding what is their corporate diversity. For us, that is very important. We think about a diverse team as making better decisions. And then the other big part of this is actually diverse and inclusion. Gender lens investing is probably the most common form of that, and that splits into three different levels. One is access to capital, so really allocating and looking for female investors, because of the history, we all know that investors can be narrow-minded. They look for pattern recognition. They look for perhaps an investor with a background that is familiar to them. And female investors have just been absolutely underrepresented. And if you look at the capital allocation, that is very clear, both from an investment management perspective, that there are just not enough portfolio managers, very few in the industry overall, but also in terms of the investments they make, which is the next layer. So we then look at any manager that makes investments into companies that provide products specifically targeted to women. That can also be services. We know 50% of the population, that is quite a big market to service. So there is a huge business opportunity here. And that's something that we want to reflect in our portfolios. And then there is another layer, which is investing in companies that do have a very specific, very favorable environment for women. And Claire mentioned that already. Perhaps they provide better maternity and parental leave policies. Perhaps they are more flexible in their working environment to enable more women to be in senior management position. So those two large areas, and then looking into more specifically asset allocation, looking into workplace equality, and then also into products and services specifically focused at women.
Fantastic, that's great. Candice, you also have a good focus on female diversity investment as well, don't you?
Yes, for sure. We also focus on the business opportunity related to women as investors. But if I were to broaden a bit the diversity topic, I would say that we really look for broad investment teams, and ours is very diverse because we look for the best elements where they are, and it's often linked with the proximity to a local market in terms of background. And what I would say is that the most important thing for the companies we target and for us as a firm is to have a pipeline of talented people with high potential that will be in the future in a position to take a leadership role versus always looking outside to recruit people from diverse backgrounds.
Fantastic. That's interesting. Also, Lydia, you have looked at comparisons between Europe and the US when it comes to diversity and investment and investing. What are the different approaches that exist in the continents?
Yeah, that is actually a very interesting topic. I guess it's very clear for us Europeans that in Europe, the environmental part is very strong, very investable. We've been really ahead in developing products and investment approaches. Whereas in the US, the social part, social equity is very, very strong. And what is very interesting about that is that we think investing in diverse managers, not only female, not only gender diverse, but also ethnicity, background. So having a broad understanding of diversity actually increases your investment universe. This is really not about excluding, it's about including a new group of investors, of investment opportunities that perhaps in the past we haven't been focused on. And what does that mean as an investor? Obviously, if you have a bigger investment universe, you potentially find more interesting, more niche, more valuable investment opportunities that you would otherwise overlook. So this is really about sharpening and being more open to more innovative investment opportunities. And sorry.
Yeah, continue, sorry. Yeah, continue what you're saying, Lydia.
Yeah, so another part of that is what has been really interesting, just to look at how you actually can make those investments. Usually the understanding is that there are not many products, or there may be only public market products. But actually, if you look at the entire investment scale from public to private investment opportunities, you can build a portfolio that actually has a strong diversity and inclusion focus. And that's across public market products, it's across private, public credit, but also in the private markets specifically.
Excellent, excellent. You mentioned there the innovation aspect of diverse investing. What about investing to diverse investing in terms of improving returns? What are the upsides? Thinking here, could you deal with that, Lydia, as well, and Sachin as well?
Look, I mean, I'm happy to pick up on it from my perspective, and I guess it's talking to clients and some of the asset owners, investors we talk to. There is a realization that when they construct their portfolios, they're looking for diverse asset allocation, diverse managers, diverse strategies. So similarly, it's intuitive from an investment perspective that you're looking for diverse teams in terms of diversity of thought that you get from a team that has different representation in terms of gender, ethnicity, and some of the different sort of diversity lenses. So I think it's quite intuitive to investors now that they don't want that herd mentality and that groupthink. They need and they require a team or an approach that embraces diversity of thought and allows for better outcomes. So I think that, you know, it's intuitive and it's academically proven that a diverse approach, whether by you know, by strategy or by different vectors of diversity, will bring out better incomes and hopefully a better risk return profile for the investors.
Absolutely. Anybody else want to comment on that? You had some views as well, didn't you, Lydia, on that aspect?
Yeah, I guess from our point of view, it's just very important to just be more inclusive, be broader in the investment opportunities you look at. And if you think about, you know, we see in public markets a lot of crowding, that there are a lot of managers in the same names. And at some point, you know, where is the alpha generation if everyone invests into the same opportunities? So really broadening out into more niche opportunities, specifically in private markets. We found that managers that have a very diverse and inclusion focused investment team and strategy, they are emerging managers. So these are less proven, perhaps they don't have the traditional track record. So underwriting them as an investor is much more difficult, because we are very simple-minded, right? We look for track record, we look for performance, we look for a team that looks like us. So underwriting those new investment opportunities can be very challenging. And as Cambridge Associates, that's something that we've done now for 40 years, specifically focusing on those emerging managers, providing feedback. Obviously, we have a long understanding of which managers, perform well, and what are the key aspects why they do so, and what that could mean for new managers in which areas. For example, many of them, they don't have the institutional setup that we would like for institutional investors. So what do they need to change in order to get there, to be seen as an institutional opportunity? And that's something that we provide feedback on and help them along the way. But obviously, because of our experience, can underwrite perhaps earlier than others, and therefore provide our clients access to those new opportunities, which I find really exciting.
Fantastic, thank you very much. Broadening it out a little bit, Claire, you've been involved in campaigning for diversity for some time. Could you give an insight into how ideas about diversity were turned into action?
Yeah, thanks, Andrew. Obviously, being an index investor, we hold everything. And so the big focus for us is really engaging with companies to improve their representation, improve their policies. We've been involved, as I said at the beginning, in campaigning on this for about 11 years. It very much started in the sort of education sort of side of things, where we put out one of our first thought pieces, and it was really to really explain the importance that we felt there was in diversity of teams in companies we're investing in. So it was really about the why is where this started. There was a lot of different research coming out from bodies like McKinsey and Deloitte at the time, and those continue to this day. But it was very much a sort of an argument around why is this important, and we wanted to put our voice out there as a large investor to say, this is why we believe it is important. And as Sachin referenced there, it is really about, diversity is difference, and that's what we're looking for to ensure that teams are making the best decisions and companies can be the most successful they can be going forward. So we got, we had lots of conversations with different companies, lots of conversations with chairs of UK companies to really seek their perspective of what a diverse team meant. So we were really educating ourselves and others around this. We joined various initiatives, as I said before, the 30% Club, and then the 30% Club Investor Group, to really, try to galvanize investors around what we felt and what we continue to feel is a really, really crucial topic. And then we're trying to work out, well, how do you move from the why this is important to the sort of how you do this? And I think that's been, very challenging for a lot of different investors. But for us, it really started sort of quite simply, where we decided to target the largest companies first. So we decided to target the FTSE 100. That's our home market. So it felt, a sensible place to start. And you can't boil the ocean. You've got to start somewhere. You can't kind of solve a massive topic like this in one action. So we really wanted to take action and not just continue talking about it. So that pool of companies was the first pool that we looked at, FTSE 100. And then we started to, sort of gain insight from them. But then we set expectations out quite clearly. And I think that was really important. And then we moved on to how we create change. And really, that's through our vote. Our vote is a very, very powerful tool that we can use. And we use that very responsibly. And we continue to do that on various issues, from, climate change to diversity. And we've, seen over the years that our votes make impact. And, we've continued to escalate that voting policy over the years, where it's now broadened out, far beyond the FTSE 100. We're now targeting the US, Japan, obviously companies globally as well. So our policies have nuances to react to the cultural kind of, environment that we're really approaching, because it is quite different. Various regions are starting from a different base. So we're trying to be sympathetic to that.
Excellent. So it does have an impact.
Yes, I mean, you can just see, obviously, this is not something LGIM claims its impact just from us alone, it's the entire market. But, we've seen that huge progress just on gender in the last, it seems slow, granted, especially compared to the ethnicity push that has been fantastically well received. And I think, the results that we've seen from that, from our campaign on that recently. But I think we went from 9.5% of females on boards of FTSE 100 to now over 33%. It's 10 years. It seems like a long time, and I certainly would have liked to have happened quicker, but we've got there, and that's a really galvanized approach from across the market. It's not just one part of the market. It's looking at investors as well as companies, as well as regulation, policymakers, etc. So it's been a real concerted effort, and I think it's really made progress. Yes, we can see in the bare numbers.
Excellent. And you've been part of that process as well, haven't you, Sachin, in terms of your campaigns? Could you share your experience there?
Yeah, I guess from coming at it from the industry-wide perspective, what we've been looking at is, particularly over the last few years, there is a lot of goodwill and a lot of emphasis and understanding that that we need to move the needle on in terms of ethnicity and diversity and inclusion. So within the diversity project, we've obviously had the Talk About Black campaign that continues. We've now got the race and ethnicity work stream that are sort of 4 key tenets of raising awareness around the experiences of people from different ethnicities. And we had a campaign called Fish Out of Water, where people were sharing sort of short stories about their lived experience. We're focusing on how religion and culture can impact people's sort of career experience, intersectionality, where obviously the different aspects of you as an individual that make you up will have a different impact on how your life experience may be in the workplace. And finally, career progression. And there's a lot of initiatives and campaigns around career progression, right from the grassroots side of things like 10,000 Black interns through to sort of mentoring schemes such as the City Hive mentoring scheme that we're part of. But one of the key things that has been apparent in all of that is there's a lot of good intention, a lot of goodwill, but a lack of data. And before you've got the data, you can't really understand where the gaps are, where the weaknesses are, and what the fixes that need to be put into place or that are required. So one of the initiatives and campaigns we're really sort of pushing ahead on is quite simple. It's called the 90% campaign. And what we're aiming for is across the industry for all firms in the next 2 years to aim for 90% disclosure rate within their ethnicity data for their workforce. Now, it's not a prerequisite at the moment to capture that data, and a lot of the work we're doing at the moment is trying to understand where there's been success stories with firms where they've got that high participation rate. I think the average rate is somewhere around 50 or 60%. I know at Invesco we're edging on 70%. There are some firms that are closer to that 90. I would say the 90% is aspirational for the 2 years, but we need a target so we have something to work towards. And a lot of the work now is helping the industry and firms to understand how do you overcome some of those barriers of reaching that data disclosure rate. So getting the workforce to understand what that data is used for, how it will be stored, the benefits of diversity, making just easier for people to provide that data. There's a lot of barriers, a lot of misconceptions. So I think at the moment we're at the stage where it's much more carrot rather than stick in terms of trying to get firms and the industry to move to that. I do feel in a few years we will get to the stage where there will be a focus from asset owners and even from the regulator in terms of rules around collecting that data, disclosing that data. We may get to a stage where there's league tables trying to understand what the sort of the diversity split is. So we're encouraging the industry and trying to be collaborative to get people to proactively work towards that now constructively rather than be at a stage where they're laggards in a few years. But that is the main focus at the moment, the 90% campaign over the next 2 years, this aspirational target that all firms share best practice, get to that stage where they can have better understanding of the ethnicity composition of their workforce, and then start understanding where some of those kinks in the hose pipes and the bottlenecks are and where they can address some of those issues. So I think that's the main area of focus for us at the moment.
Fantastic. You mentioned there's a lot of goodwill in the industry in terms of getting these things going. Have you had any pushback?
I don't think we've had pushback in terms of the intention. I think there has been valid concerns raised, either if there are smaller firms that struggle to collect some of that data or don't have some of the systems in place. There are also large firms that have, like Invesco, for example, that are multi-jurisdictional, that have different rules in terms of data collection, data storage, what they can and can't ask employees. Yeah. So part of the work at the moment is working, and there's been a lot of good papers, including a paper from the IA and the Diversity Project around sort of how you address some of those areas. But there are workarounds for all of those, right? So what we're trying to understand is rather than everyone sitting in their silo and trying to understand how to address this issue, sharing best practice, collaborating, getting around the table and talking about how we get over some of these issues. So the pushback has been, I would call it much more sort of operational rather than you know, the actual philosophical thing of collecting the data and what the agenda is here. It's more, okay, that's great, but how do we do that? Or how do we actually, you know, with the best intention, there is C-suite engagement at a lot of firms where they want the staff to provide this data, but you can't force people to provide the data. How do we get through some of those barriers? And so that's where the sort of, I wouldn't call it pushback, but that's where some of the concerns have been raised, and they're valid concerns. And that's why I've said this is an aspirational target. I think what the industry wants to see and what asset owners and investors want to see is at least an intention and an initiative to start moving in that direction of better data collection.
Okay, excellent. And you've got a different perspective, haven't you, Lydia?
Yes. First, I would like to absolutely share that we have the same problems because we are a global investment firm, and
right.
The data we can collect in the UK is very different to what we can collect in the US. So absolutely share those concerns. And how we approach this, obviously what we can control the most is engagement with the asset managers, with the fund managers that we work with. So when we have a meeting, you know, and we see under all white male cast, we have questions, you know, what is your pipeline? How do you think about diversity? And what are your initiatives internally? And, you know, we do get a lot of pushback because in the asset managers usually say, well, there is no one in the pipeline and there are not enough female investors. You know, we always find someone in the IR position and in marketing, but really there are no female investors. And that's something that we can't accept, right? Maybe that's the case, but we need to build the pool in order for them to move out the ranks. So that's something that we really push on and ask, you know, but how do you engage with that? Do you have internship programs? Do you engage with universities? Do you broaden the pool of recruits as well? You know, do you only look at iBanking, or do you actually look at other skill set also that actually could help your investment, broaden your investment view as well? So I think everyone has the responsibility and the tools to really make a difference. And if we collectively, you know, engage and really push this forward, we can make a difference. And I think we've seen that already.
Fantastic, that's great. And Candice, would you like to add as well?
Yeah, I would add one last point around the fact that, interestingly, I've been exchanging a lot with my counterparts in the industry, and from big asset management firms, smaller asset management firms, private equity, and I've noticed that we have moved away from a debate around diversity. Does diversity lead to better financial returns? To this kind of certainty that it's just the right thing to do to attract the best employees and address consumer needs globally. So we have made progress. We have to acknowledge this progress and recognize also that there is a long way to go, but it's getting better.
Fair enough, because you have done some work on the wider social side of the debate as well, haven't you, in terms of diversity and in its widest possible sense?
Yes, so as part of the launch of a new social fund that will have two legs, one on employee engagement and the other one on customer satisfaction, we address diversity indirectly, but the thing is that it's going to be data driven. So we will continue to engage with the industry and with the companies themselves to improve our database and help moving the needle for the social data to catch up with the environmental data. I'm sure the social taxonomy in Europe will also help for social standards to emerge, not only at European level. It could be used as a lab as global standards on these topics. So it's very exciting to be part of this project, and I'm looking forward to engaging with companies on that. I understand the operational issues and the fact that there are different legislations and they comply with the different legislations, but we share the same goal, so that's positive.
Excellent, thank you very much. And in relation to that, Claire, you've done some work on cognitive diversity, which you identify as vitally important. Can you share how that relates to the overall investor influence and how you assess things?
Yeah, and I think, you know, us sort of talking about cognitive diversity really was trying to, you know, when we first started our campaigns 10 years ago, was really trying to set the picture for what we were talking about, because I think it can be quite, you know, a lot of different people have used to have kind of a lot of different ideas of what diversity meant, and actually diversity became synonymous quite quickly with gender.
Yeah.
And just actually with women, which actually was where we started as a you know, a investment industry, I suppose, because, you know, it came from that not enough women on boards approach, absolutely. But we know that it's a lot broader than that, and the conversations really picked up pace over the last years. But for us, diversity just means difference. I think a few of us have mentioned that today in various ways, but it's how we measure that difference, which is what we're trying to do, which is actually really quite hard. So in order to do that, you know, you're kind of using proxies essentially. So you're using gender as a proxy, you're using socioeconomic background, you're using ethnicity. And that's sort of the only way we can really get a measure for the difference of this, which is the difference of thinking, because that is a non-tangible kind of thing we're trying to do here, and that's really quite hard. So it's, as Sachin said, it's about the different lived experiences make you a different person. Makes each of us very different. So if you've got people around the table that all look the same, then you're making the assumption that their brains are not functioning very differently. You know, you're all going to be sitting in an echo chamber agreeing with each other. And actually, we know that that's not what we're after, to actually ensure that companies are, you know, really harnessing the right opportunities, assessing the right risks. If you all come from the same background and you're all thinking the same, you might not be thinking, oh, X, Y, and Z is an opportunity, because you're all thinking exactly the same. So that's really sort of what we are trying to get to with the phrase cognitive diversity. It is actually about the diversity of thought, but it's very, you know, you can't assess that other than using all of the different kind of lenses and streams that we are to try to get to that, to really ensure that there is a cross-section of people that are in leadership teams on boards of companies, so that we're challenging ourselves and we're challenging each other, so that we can get, you know, so that we can ensure the companies that we invest in are the best on behalf of our clients, because, you know, that's what we're doing here. And as you know, was mentioned, companies are made up of people. So we're trying to assess that sort of cross-section of people, and to ensure there is a cross-section of people that we are investing in, essentially, because we're investing in that company directly. But also, you know, a phone company, for instance, their customers are going to be every single type of person. So to have, you know, that company represented by all white men, let's say, it is not representative of the customer. So therefore, am I, as a white woman, going to say, well, you know, all white men, you know, leadership team, they're going to be thinking about what I need as a customer? I'm probably going to say no. And actually, this goes just to all the different elements of diversity. So that's what we're trying to get to here. And we've just talked about cognitive diversity, as many people have, to really try to set the picture.
Brilliant, thank you very much. You've all touched on an element as well in terms of the importance of data. How can that be dealt with? Because that seems to be a big stumbling block, doesn't it, in terms of the diversity debate within investment?
I mean, I'll go in there, Andrew. I mean, I think we've all said here that, you know, data is absolutely crucial, and it is still not great. You know, it's still very patchy. Certainly for us, you know, you can't develop engagement strategies, voting policies, investment decisions without data. And I think it's, you know, the knowledge that investors are placing such importance on this, and the market is placing such importance on elements of diversity, is really crucial that companies understand that, because they are being assessed on all of these different elements. And certainly, our ESG scores we developed a number of years ago, we've got 4 very clear, the 28 metrics, but within those 28 metrics, there's 4 very clear metrics on, at the moment, just gender diversity. We want to broaden it out, but we haven't, again, the data is not great, but we've taken gender diversity at 4 different points of a company. So gender representation at the board level, at executive level, so senior leadership, at management level, and broader workforce level. And we're actually assessing companies on those different, that cross section of representation, and that is then being developed into a score that is this then an overall ESG score. So this is really important, and that score is essentially tilting some of our portfolios in and out of those companies. So if they've got a higher ESG score, we'll tilt into those companies investment wise. If they've got a lower score, we'll tilt out. Obviously we can't divest, we're an index investor, but that is our way of allocating and saying to a company, if you're not getting some of this stuff right, and this is the stuff we see as really, really fundamental to every company across every market, then you're going to be, not doing as well as another company that's looking at this in the right way. So we know that data is a challenge. It has been scarce. There's legal restrictions. We've talked about that a little bit here today, where you can collect data. But in our campaigns, we've made it very clear to companies that the onus is on them to collect this data, to represent it in the right way, to present it, to basically report it accurately, consistently, and timely, because investors are using this for all of these different elements. And it could be all 3, but it could be just an investment decision or a divestment decision. It could be just an engagement campaign. But, all of these things are really, really important. So when we've, done these campaigns, we've had lots of conversation with companies. So our ethnicity campaign is the latest one we've done, and we were very clear to companies to say we are using ISS assessed ethnicity data. Now, we've been very, very open about the fact that is not perfect, but we cannot wait for perfect data to do something on this, because it's too late and it's too long. It's going to take too long. Okay. So we know that this data isn't perfect. Companies absolutely understand why we're using this data, but we're saying to companies, if you feel your data that ISS is pulling for you is not accurate, you go and have a conversation with ISS and make sure the data that they're gathering on you is the best it can be. Are you not reporting it accurately? Are you reporting it in a confusing way? Are you not reporting it in the right place so they can find it? All of these different things are really important. So the onus is actually on the company to ensure that their data is being reported. They're collecting the right data. Now, they know the data that investors are using. We're all being really open about it. We're all being very clear about that. And I think that's where the onus is on us as investors to say to companies, we are using this data for X, Y, and Z. There's no kind of black box. There's no kind of secret. It's very open. It's very transparent. It's very, very clear. And I think those kind of steps will help us get to better data over time. And it will take time. But, we're also seeing the FCA new listing rules in the UK, comply or explain. You've got to get your data right. In the US, the NASDAQ, set out their expectations a year ago or more. So this is now really becoming very crucial. So companies can't hide behind the, we didn't really know it was important sort of conversation. And I think all of these pushes will help data get more accurate and usable over time.
Brilliant. Thank you very much. On the wider initiatives within the investment world, there have been some good ones. I think here of the Asset Owners Diversity Charter and the working group that sits behind it. Can we get a perspective from all of you in terms of where we are, therefore, on the road to diversity within the investment umbrella?
If I just kick off on that, look, I think that's a great initiative, and something Claire touched on there as well is that there is an onus on asset owners and on on investment managers, or depending on which side of the fence you're sitting, to make sure not only collecting the data and provision of data, but also making it easier to supply that data, right? So some uniformity in terms of the format or of how it's digested and used, because if every single consumer of that data wants a different way for it to be sliced and diced, it just adds another dimension of difficulty for everyone, right? So I think that's equally as, I mean, look, it's great that there's all the initiatives to collect the data. What we need to do is make sure that then there is some uniformity, making that supply of that data as easy as possible, and ensuring that everyone's targeting the same sort of outcome is very important. So I think initiatives like the Asset Owner Charter are a great start, and that just means across, you know, various consultants, various large asset allocators, they're all in agreement of what they're looking at when it comes to that diversity data. And I think that that's something we need to cascade out, maybe as a starting point across the industry, so that at least we're all heading in the right direction. And then as it evolves, right, we get deeper into the data and how we sort of pull it together. But I think as a starting point, it's quite an aspirational goal to ask a lot of these firms to provide this data. So if we can help on that journey, whether it's the format that it's provided or some of the barriers we've talked about and how you get around those, I think that's going to just mean that people are more forthcoming in terms of moving towards that end goal.
Brilliant. Yeah. Do you have any views, Lydia?
Yes, standardization obviously is fantastic, helps everyone. From our point of view, because we build customized portfolios, every investor has a different view, what impact means to them, what ESG means to them, and where they want to actually invest and allocate. So for us, it is really depending on, you know, first of all, finding out where the investor would like to make an impact, where they would like, what are their values, what do they want to align their portfolio with, and then, you know, we help them obviously to translate all the data that there is into something that they understand that is very suitable to the areas that they are very interested in. So for us, it's really a translation job, but with more information, more data that make it easier for everyone. And that's absolutely right. I agree with that.
Fantastic. And Candice, you've noticed in some of your research the importance of role models in the asset management industry, especially in terms of the evolution of the investment industry.
Yes, but if I may, I will just add something on
sure.
the previous question. That I've noticed is that companies themselves have understood that they have an interest to disclose more data. Yeah. Because as social funds are emerging, more capital will be allocated to the firms that are best in class in this field, that are pioneers and implementing the right initiatives. And they also understand that with the rise of social media, they can't be black boxes anymore. Their reputation is at stake. Anything can leak. So disclosing more information on diversity is key. And finally, something we haven't touched upon is the pandemic that has really highlighted the importance of the social factor, employee engagement. It can also be favored by having a diverse workforce. And now the power is obviously much more on the employee side than on the employer side after the big quit that the pandemic has triggered. So again, all these arguments are to prove the fact that companies are embracing this trend, and we should and we will look for more transparency on this topic.
Excellent. Thank you very much for that. That's excellent. So sort of trying to wrap up in terms of the crucial points that we're bringing together here. What does, I'll go around the panel, what does diversity in investment really look like?
Shall I take that first, Andrew?
Yeah, go for that, Claire.
Okay.
Yeah.
Yeah. Well, for us, I think it's sort of a holistic approach, really. So it's trying to sort of, you know, build a kind of approach that is sort of not just in one direction, if that makes sense. So for us, it's very much around education, keeping this on the agenda, talking about it, and really putting importance on this as a topic, because it's very easy for you know, topics to drop off as other things climb up the agenda. I think for us, obviously, continuous engagement with the companies that we invest in, and that continues. As I said, our ethnicity campaign is the latest campaign that we've done. voting sanctions. So it's kind of a sort of stepped approach: education, engagement, voting sanctions, and those continue to escalate and have done over the last 10 years. You know, creating policies and strong policies around this, but also reacting to potential legislation or policies on this as well. So, you know, the consultations that came through from the FCA recently and that sort of thing. So really putting our thoughts into that as well. Building out our ESG scores. We're continuing to see how we can add ethnicity data to that going forward. Looking internally as well, and that's a point that I wanted to sort of make on the asset owner initiative, which is really important, is that it's putting an onus on us to look internally as well. You know, we are saying as a owner, to say, you know, investor to say, this is what we expect of companies, but of course we need to expect that of ourselves as well. And that's really crucial. But it also means that we've got to hold ourselves up to a high standard. The Asset Owner Initiative is helping us to do that. And I think that's just going to help the whole piece move forward. And I think that is sometimes why some investors haven't placed voting sanctions on companies they invest in, because they're not in a perfect position themselves. And we absolutely know as Elgin, we're not absolutely perfect, but again, you can't wait for perfection before you do something, because you get to a state of inertia and then nothing happens, and no, it's sort of we're not moving forward with it. So I think that looking at ourselves internally is really, really important, and we continue to do that and spend a lot of time doing that. Divestment obviously, or tilting in the way that we do is you know, a part of this as well. So all of this is sort of looking at this in a very holistic way, but to me it's kind of, if you can only do one of those, go for it, grab it and do one, even if it's just an engagement campaign or setting a voting policy, because, you know, resources are tight in places, and if we can only pick on one area of that to actually push and help on, then I think we need to go for it.
Fantastic. Yeah. Sachin, what's your perspective?
Yeah, I mean, I'd agree with everything said. I guess from and touching on the last point there that Claire picked up on, is that I'm coming at it much more from, you know, the asset manager and the investment management industry side of things, and I think it's important that we ensure that while we are pushing quite rightly for greater engagement, disinvestment policies where appropriate, just greater transparency with companies that we're investing in, at the same time, you know, we need to be held accountable and ensure that we're reflecting that in our industry. Now, it's something that's not going to happen overnight, but I think we're making steps in the right directions in terms of being collaborative, you know, uniformity in terms of the initial approach. And the key thing, you know, I've said a few times, is the data collection is the starting point, right? You can't fix the problem until you identify what the problem is, and then put in some remedial action into place, which is why we've kept it quite simple with this 90% campaign, because the starting point is, it's great to have all these, and there are lots of great initiatives happening across the industry, and you know, hopefully the sum of all those small parts moves the needle. But before you can actually address those issues, you need to understand what the issue fully is. So the data collection is important, and understanding why we don't have that data. What is the fear? What is the issues that are holding up, you know, people actually disclosing that, or putting in procedures into place that collect that data. So I think that's important. That's something that's not mutually exclusive, and it should happen in parallel at an industry level while we're still, you know, engaging as investors as well.
Fantastic. Yeah. Lydia, would you like to share your views?
Engagement absolutely is key in my view as well. This is not a challenge that will solve itself. We actively really need to set targets and move behind that. For us, we invest obviously from a portfolio perspective along three lines really, and one is a very focused approach, allocating to those asset managers that have a more diverse, perhaps gender or ethnicity diverse background. Then the second one is a more holistic approach across the entire portfolio, looking for opportunities to invest in product services that are focused on more diverse part of the population. as well as investing in those companies and businesses that are very friendly and have a very open culture towards more diversity and inclusion. And then we have another part of it, because we also have to understand that for some investors, you know, they're still learning about this and might be a bit uncomfortable. So there is a neutral approach to at least not invest in anything that's absolutely against this target towards more diversity and inclusion, which I think is also very important. So we get everyone on board, and then as an industry really can make a difference.
Fantastic, yeah. And to you, Candice?
Yeah, I would also say that in the goal of targeting more women investors, we need to offer financial products that speak to their values, personal goals, and encourage women to save earlier in their life. And this is going to be achieved through education. And beyond women, I would say if you don't come from a privileged background, if your parents didn't work in finance, where would you find the idea of working in asset management industry? So as an industry, we need to engage with universities, and that's what we're doing in the UK. There is a very good association called GAIN, Girls Are Investors, and we have been hosting student girls at a tricky point of their life when they could, even if they are studying chemistry or whatever, engineering, they could envisage, contemplate a career in asset management. They just need to have this idea in mind. So they need the inspiration, and that comes to the fact that we need to have more role models. We are very proud at Carmignac to have 2/3 of our assets under management managed by women. So they can see that it's a possibility, and I think that's key.
Excellent. That's fantastic. Yeah, thanks. So looking ahead, this is where we are today. We're talking about this. Where would we hope to be if we reconvened in 5 years' time and talked about diversity investment? Where would we hope to be in terms of how progress has been made?
I would hope, Andrew, that you know, I think in some areas we're still talking about why this is important. Sometimes we still get that challenge, and that really surprises me and upsets me a little bit. So I really want us to have moved on from this is just business as usual, and this is you know, an element that is thought about and is baked into every company in terms of its policies, because you know, we're talking about here sort of, well, we can sometimes focus maybe on the representation side, which is really important, but actually you know, we know that if we're not supporting diverse people within businesses, then it's obviously not going to thrive. And by that, it's things as simple as policies, you know, being set up in the right way for diverse people to you know, thrive and to get the best out of them. So I think it's for companies to realize that their people are assets. They're not a cost, they are assets, and that they need to be looked after in the same way as a balance sheet would be looked after, you know, at top of mind. And actually, so really, you know, for this to be just a completely kind of, we don't have to have, you know, loads of panels and webinars on this anymore. This is just something we do as business, like falling off a log. It just comes naturally. That's where I'd like to see.
Fair enough. Yeah, that's a good point. Yeah. Who wants to go next? Look into the crystal ball.
I mean, from my perspective, it's pretty simple. I think that, and Claire touched on this earlier as well, that we want to be in a position where, and this is, you know, aspirational, but most firms, the senior, all the workforce as a whole, just as a good representation of their customers or of the society as a whole, right? And the right people or the best people have managed to get to the jobs that they deserve to be in, or the positions they deserve to be in. I know it's it sounds very aspirational, but I think that's behind all this. That's what we're aiming for, right? To make sure that there aren't barriers in place, that there aren't unconscious or conscious biases, and people can actually flourish and get to where they deserve to be.
Yeah. Candice?
Yeah, it's interesting that CEOs often say that their people are their best assets. So if you want to really walk the talk, I think it's very important to invest in your people and empower human resources to innovate and make sure that the employees are doing their best, like they're not just doing their job to get a salary at the end of the month, but to really make sure the company adapts to a very changing environment. You need to have people who are going beyond the scope of their job description and encouraging innovation.
Brilliant. And Lydia?
For me, I'm not sure whether we can make it in 5 years, but a world where a homogeneous team stands out, where essentially everyone would notice a white male team as odd because everyone is just diverse, and that's how the industry is. And then also on the second part, just in terms of asset allocation, that we as investors are less apprehensive, have less of concerns around allocating to those diverse teams, so that they're really at par in terms of access to capital, in terms of access to investors, and that would be a fantastic world to live in, I think.
Fantastic. Yeah, that's great stuff. That's bringing together lots of really fascinating insight. We have a question here for the panel. It says, could the panel provide more details on how corporates should deal with diversity and inclusion analysis? Who would like to take that? Any takers? Would you like to deal with that one, Lydia?
So the question was around how corporates can become more diverse?
Yeah, and what sort of analysis that they should use? What better analysis that they should embrace to deal with diversity?
Well, we had the data discussion. I think that is a place to start. First of all, you need to know where you're at. How does your body look like? And then you can understand where you need to go and where really the leaks are. So I would say start with an analysis on what your current population looks like. And then it's very clear that if there is one population really overwhelmingly, part of the employee body, then that's something that needs to change.
Yeah, I think I would add that, and then when you've looked at that, start looking at things like where your candidate pool is coming from, what's the pipeline, what procedures you have in place, right? Is there a reason that you have this lack of representation? Are you looking at grassroots early career development? Are you looking at different universities rather than the sort of or people from different backgrounds or more women returners, etc.? So looking at then what the underlying potential remedies could be to fixing if there are problems.
Excellent.
Yeah, I'd agree with that. Looking at the sort of internal mechanics, and it's things like if you're not getting women back after maternity, why not? Are you doing exit interviews with people that are leaving? Are you on? That's a real low-hanging fruit that a lot of companies don't do, which is simply interviewing people that are leaving. Now it can throw up some reasons as to why they're leaving, and it could be well, I didn't get the promotion I wanted, or I didn't get the support I needed when I came back from parental leave, whatever it might be. So I think that kind of analysis is really important, as well, and being really open and actually talking to your employees, really trying to understand, so having that time for those kind of open forums with senior leadership, so actually a kind of sharing thoughts and sharing experiences, to really open this up to not being kind of a discussion behind closed doors, because I think then that really throws up trust, and when you've got that trust, then people are going to be telling you much more honestly about their experiences.
Excellent, and that's fantastic. Well, I think that brings us nicely to the end. We've been very comprehensive, ran through so many issues in the hour that we've been discussing this. I'd like to thank all the panel members. Thank you very much for your time and your fantastic insight. I hope you've enjoyed it. I hope everybody watching has enjoyed it as well. You'll able to view this on our website in the next week, and we'll be doing another one later in the summer. So I'd like to thank you for watching, and goodbye. Thank you.
Thank you.
Thanks. Bye.
Thank you very much. Bye.